Welcome to the Free Library of Philadelphia. My name is Andy Cahan, Director of Author Events, and I'm very pleased to welcome our esteemed guest this evening. The Governor of the Bank of England and Chairman of its Monetary Policy Committee from 2003 to 2013, Lord Mervyn King steered the UK's central banking institution through the financial crisis of 2008 and the ensuing recession. Currently a professor at NYU and the London School of Economics, he was named Baron King of Lothbury in 2013 and a Knight of the Garter in 2014, and he is also a Fellow of the British Academy. His book, The End of Alchemy, Money, Banking, and the Future of the Global Economy, has been praised by highly regarded economists, Paul Krugman, Alan Greenspan, and Paul Volcker, and described by the Financial Times as an outstandingly lucid account of post-war economic policymaking and the dilemmas we now face. In his talk tonight, Professor King will discuss the implications of Brexit for the world economy. Please welcome Mervyn King to the Free Library of Philadelphia.
Andy, thank you. Ladies and gentlemen, good evening. There can be no more appropriate place to come than Philadelphia to explain to you why last year Britain voted for independence from the European Union. But there is an even deeper reason why I'm so pleased to be here. The Founding Fathers, for me, have always been an ideal group of remarkable people, and wouldn't we give a lot to have some of them back with us today? I have always remembered a story that Gore Vidal told in his little book about the creation of America. And he told about a conversation he had with President Kennedy. And Jack Kennedy and Gore Vidal were together in Hyannisport. And Jack Kennedy said to him one evening, he said, Gore, why is it, he said, that as President of the United States, I can meet anybody I want to in the world. And I meet all kinds of incredibly important people. But none of them impress me. Why is it that these people, basically a bunch of farmers from a small agricultural set of communities, the Founding Fathers, produced ideas which still govern our lives today? And Gore Vidal said to him, he said, it's very simple, Jack. He said, the Founding Fathers believed it was really important to take time to read and think and write. And none of the important people that you meet in the world today ever take time to read and think and write because they're too important and too busy. So the theme of my talk is the importance of ideas. And they are even more important today, I think, than ever. And it's not something which our normal political culture takes on board easily. Over the past year or so, we have seen a number of political convulsions around the industrialized world. Now, people react in different ways to the vote in the UK for Brexit, to the election of President Trump, to the election of Emmanuel Macron as president in France, and of course, only a week or so ago, to the elections in Germany, which showed a very sharp fall in the votes for both of the coalition partners. Now, there are many factors which affect these votes, which vary from country to country, but there is one factor, I think, in common, which is that people voted for leaders or outcomes not because of who those leaders were, but because of who they weren't. This was very much a negative vote against the establishment, against the political class who had not responded to their concerns. And I think the fundamental question that we do need to confront is why has there been such a reaction against the establishment? And why is it that the establishment has failed to understand the concerns of so many people? I was struck that the reaction by the political class in the United Kingdom to the Brexit vote was very similar to the unfortunate remark which Hillary Clinton made that half of Mr. Trump's supporters were the deplorables. And once you create a political culture in which one group, taking one point of view, regards the others as deplorables, and those who are described as deplorables feel they've been let down by their political class, you create a situation of such political divisiveness that it becomes very hard to have a rational debate about important questions. So I want to talk about that in part, but I do think there is a significant timeline from the financial crisis, which began a decade ago, to the anger represented by those political convulsions. So I want to spend a few minutes explaining very briefly why I think the financial crisis generated such anger and why there is a need almost for a technical solution to the problems that arose a decade ago in order to prevent the anger that arose towards bankers and the bailouts of banks a decade ago. And then I will move on to say something about Brexit and about the challenges to Europe and why it is, I think, that there is such strong feeling on both sides. That's why when I left the Bank of England and decided to write a book, I did not want to write a memoir. There were an awful lot of books which seemed to amount to many people having saved the world. I knew that I hadn't saved the world, but I did want to write a book about ideas. And the paperback edition that's available at the end of the talk has a new preface about Europe, which is why I want to bring the two sets of issues together. Now, I think that the financial crisis reflected a failure of intellectual imagination on the part of many, if not most, economists, and of inherited ideas. I don't think the crisis happened because of individuals, whether they were Dick Fuld at Lehman Brothers or Fred Goodwin at the Royal Bank of Scotland. In a sense, they were symptoms of a more general set of faulty ideas. And I think the system failed. And what prompted me to write the book was a conversation that I had with my opposite number in China when I went to Beijing. And we had dinner one night, and it was just the two of us with one other private secretary each. A very good dinner, I may add. And I reminded him of this apocryphal story that Chow En-lai is alleged to have been asked, what his reaction was to the French Revolution, and he said, too soon to tell. Now, Henry Kissinger states very clearly that this was not true. This is an apocryphal story. But I asked my opposite number, I said, well, what do you make of the Industrial Revolution? Because that started in my country, in the part of England where I grew up. And what do you in China make of the Industrial Revolution? Because they study incredibly carefully and in such detail events around the world. And he said, very interesting question, Mervyn, he said, because we have thought about it and we have learned a great deal about the success story of the industrialized West since the middle of the 18th century, the benefits of competition, the need to allow innovation, to allow private companies to flourish in order to promote productivity growth and higher living standards. And we've learnt a lot from that. But then he had a gleam in his eye and he looked at me and he said, Mervyn, I'm not quite sure if you in the West have quite yet got the hang of money and banking. And of course he was right, because right through that period from the middle of the 18th century onwards, although we have had remarkable economic growth, which has transformed our living standards in the West, it has been punctuated by regular periods of banking crises, banking failures, and indeed inflation and the inability to manage paper money. Banks and paper money are what I call the alchemy of the financial system. Paper money is in its essence worthless. We made a lot of money at the Bank of England, which we had to hand over immediately to the Treasury on behalf of taxpayers, printing banknotes for about 1% of their face value and then selling them to the banks for their full face value. The temptation to do that on a scale that's excessive has been one that's drawn governments over the centuries into devaluing or depreciating the value of the currency and hence inflation. Banks are maybe an even better story. Banks borrow short and lend long. They borrow in the form of creating deposits, or they borrow overnight or for a month or so from other people, and they lend the money to businesses, to families, to enable them to finance long-term risky investments. So they borrow short in what everyone assumes is a safe form, and they lend long in a risky form. Now, at one level, if you sound puzzled by this, you should be, because this is not sustainable forever. From time to time, when people who've got money in a bank decide they want to take it out, if they turn up at the bank will not have the cash to pay out the depositors, and so you get a bank run. So the most important point to make about the recent financial crisis is that, in essence, in 2008, there was a bank run on the US financial system. It didn't look quite like the bank runs that everyone grew familiar with in the 19th century, but it was, in essence, the same. It wasn't that individuals queued outside the banks to take their money out. It's that other financial institutions which had lent to banks for maybe literally overnight or perhaps a week decided not to renew those loans. And the banks, therefore, well, how can we finance our loans and our investments? And they couldn't. They then had to turn to the Federal Reserve. This is not a new problem, but it's a problem that we haven't entirely resolved. The alchemy is still there. The banking system is safer than it was in 2007, no doubt about that, but it's not safe. Now, throughout the 20th century, many American economists decided that this was far too risky an outcome to allow the economy to be the subject of a very risky banking system, and they decided that what we should do is to get rid of what had become known as fractional reserve banking. That is, banks that don't have the full backing for their deposits in the form of cash. And so they argued that banks that issue deposits and banknotes should only be allowed to invest that money into safe government securities. The trouble with that is that, although that would make the banks safe, who on earth is then going to finance the risky investment in our economy? Who is going to finance mortgages? Who's going to finance company investment, both in small businesses and big businesses? Well, can it all be done through the equity stock market? Unlikely. So no one in practice has ever really had the courage to abolish banking as we've known it traditionally. But what I try to do in my book is to set out a proposal which would make those deposits safe and which would end bank runs. And the solution is to recognize that we shouldn't go to two extremes. The extreme of getting rid of banking as we know it would mean that we couldn't finance investments. But the other extreme is where we ended up in 2007. 50 or 60 years ago, most banks had a very large proportion of their assets in the form of cash, reserves with a central bank, or short-term government securities that they could easily liquidate in the market or take to the Federal Reserve and get cash in return. In 2007, maybe 30% of the balance sheet was in that form. By 2007, the proportion of the assets of a typical bank in this country in that liquid form was less than 1%. Now, I faced a similar problem in 2008 when the Royal Bank of Scotland failed. And they came in on a Tuesday and they said, terribly sorry to tell you, but we can't get to the end of the day. We're going to fail. And at that point, we had no choice. We couldn't let the ATMs close. We couldn't let the entire, all the depositors in the Royal Bank of Scotland have their money frozen indefinitely. People in other banks would have thought, well, maybe it's our turn next. We better get our money out of Barclays or Lloyds before the same happens to them. So we made a secret loan to the Royal Bank of Scotland. And of course, in return for that loan, we took security. We took collateral. And at the end of Tuesday afternoon, I said to my staff, so what is this collateral we've taken? And they said, oh, it's mortgages. I said, really? I said, whose mortgages? You know, expecting that, well, you know, Mrs. Smith in 11 Chestnut Avenue or whatever, but we have no idea. We just had to take essentially the assets of the bank as a whole. Now, in their memoirs, Tim Geithner, who was Treasury Secretary, and Ben Bernanke make a great play of the importance of throwing money at the problem when there's a crisis. And it's true that once the crisis has started and become as serious as it was in September 2008, that you really have no choice but to throw money at it. But the lesson from that is not just to be ready to throw money whenever there's a crisis. The lesson is you don't want to start from here. So my proposal essentially is a simple one that says in normal times, when there isn't a crisis, we have to make banks pay an insurance premium. And what we're going to be doing is to say to banks, in normal times, you have to bring some of your assets to the central bank, to the Fed, and the Fed won't just have half an hour on a Tuesday afternoon, it may have 2 months to examine these assets carefully, and then the Federal Reserve will make a promise. It will say, if at any point in the next 5 years, for example, there is a crisis, and you bring these assets to us, this is the amount of money that we'll lend you, and you will have in cash in return for giving us this security. And the rule is, and I call this a pawnbroker for all seasons, because basically the central banks in 2008 didn't become the traditional lender of last resort. They became pawnbrokers. We had to take in the gold watches that banks brought us, and most of these watches were broken. So what you want is to make sure that the banks have to give to the central bank, or position with the central bank, sufficient collateral such that the amount of cash which the central bank is willing to lend against that is big enough to cover all the deposits that could run if there were to be a bank run. And if that were done, then everyone would know that there was no need to join a bank run if it started, because you would know that the central bank had promised that there'd always be enough cash to pay out the depositors. The reason people join a bank run, both in the 19th century and more recently, is because they fear that unless they're the first out, there won't be enough money left to pay them. And this proposal would put some restrictions around what banks could do in order to ensure that there could never be a bank run. And I think that if you look back at the banking crises in American history, it's the bank run that's always proved so devastating. Something happens in the economy to create bad news. That's going to happen from time to time, and the banks will be on the receiving end. The problems often don't originate in the banking sector, but because banks borrow short and lend long, they're so fragile and vulnerable that you get a bank run, which leads to the amount of money in the economy contracting rapidly as bank deposits shrink. That's what happened in the Great Depression. So I think we could put in place this pawnbroker for all seasons. And I looked at the balance sheet of several big US banks, Bank of America, Citibank. Now, we're not there yet, but we're not so far away as to make this an unreasonable or undoable proposition. And I worry that where we've gone in regulation is the wrong direction. What we've done is to say, let's make sure that 2008 can never happen again. But what people mean by that is, let's write down exactly what happened in the crisis of 2008 and introduce thousands of pages of legislation and rules in order to ensure we could never get an exact repeat of 2008. The most fundamental thing to be aware of is that the world is so uncertain that we don't know what the next crisis will look like. We can't possibly know. And there's no point trying to do it. People often say, well, why didn't you hire thousands more people to look into the future and guess where the financial system could fail? But you can't do that. We will never know. The right question to ask is, if banks get into trouble for whatever reason, how can we make the system resilient without knowing what the source of the original crisis was? And I think the pawnbroker for all seasons idea would do the trick. Now, this is a technical issue, it seems, but it would change the banking history of countries in the future. And I think it would change the politics of it, because I have no doubt at all that what went wrong politically in the period after the crisis was that for the previous 25 years, people had been told that you should now give up some of your rights as union members. You must allow a more flexible labor market. You must accept that if you work for a business or own a business for which there is no longer a demand for your products, we let the business go bust. And you lose your job, and you find another job somewhere, somehow. And if we sign up to this rule of the game, then the market economy will ensure that we'll have higher living standards than in any other system. Market discipline is good for us all. But when the banks failed in 2008, where was the market discipline on the banks? Well, there wasn't any, Now, there was a good reason why there wasn't any. The reason was that if we allowed the banking system to fail, we would all have lost. The whole economy would have collapsed. So we were forced to bail out the banks because there was no alternative. If we could say to people, the banks have been constrained before the crisis to pay what is in effect an insurance premium, or to take out third-party insurance in the way that drivers have to do before they're entitled to drive on the road. If banks have to position this collateral with a central bank, everyone would know the system was safe, and people would have been constrained every year without a crisis, and then they would be entitled to borrow from the central bank in a crisis. And it wouldn't then be described as just a bailout. Now, that's why I think the crisis is still one of a lack of ideas. People are now exhausted with debating regulation. Washington seems to be moving in a direction of reducing the burden of regulation. And there's no doubt that some of the complex regulation is a serious mistake. If you have a regulatory system that requires literally thousands of pages of rules, common sense tells you this is going in the wrong direction. But the right thing to do is to put in place simple but effective regulation to make sure the banking system can't be in trouble again. And I think this anger about bankers is dangerous at one level, because it doesn't matter how many bankers we put in prison today, it won't stop a future crisis if the system isn't reformed. And that's the danger of focusing somebody must be to blame. But it isn't somebody, it's the system, it's collectively a failure of intellectual imagination. Now, I think a similar thing has happened in Europe with the developments of Europe, and in particular, Brexit. The Brexit referendum, June last year, the majority in the referendum was not big, small, though it was bigger than in 4 out of the past 5 US presidential elections. England has 9 regions, 8 voted to leave, and only 1, London, voted to remain. Now, I think that only another referendum, we don't have a written constitution, and we're paying the price for that in many ways. Some people say we should have another referendum. Well, I think you'd have to have one to reverse the result. But suppose we had another referendum. That makes it 1-1. Do we have the best of 3, or is it like Wimbledon and the Grand Slams, the best of 5? And interesting, there hasn't really been any change in public opinion since. So the political class in Britain has been wrong-footed. And I think the UK is now facing up to issues that the political class swept under the carpet when we joined in 1973 at a low point in our economic fortunes. The basic problem is that the United Kingdom has never shared the political objectives of the rest of the European Union. For their various reasons in different other European countries, they are committed to a political union. The UK has always pretended, well, we joined for economic reasons, and we're not going to have any part to play in this political union. But you can't join a club unless you really share the aspirations of the other members. In fact, all of the original members of the common market had been either occupied or defeated in the Second World War. Britain hasn't been occupied since 1066. Now, the issue that the UK has failed to understand, I think, at present, is that, interestingly, Brexit isn't a big issue for the rest of the European Union. And this is something where we're not very good at Britain. We tend to think of ourselves as being the centre of the world. We're not. The rest of the European Union faces 2 existential problems. The first is the future of the monetary union, which is not working, and that's admitted even by the President of the European Central Bank, by President Macron and others. The trouble is that the views of people in, say, France about the need to create a finance minister for the euro area who would then have the power to make transfers from German taxpayers to Italian taxpayers and Greek taxpayers, that's the French view, is absolutely at odds with the German view that the monetary union started with a treaty, constitution, that said there should be no bailouts. There's a no bailout clause in the Treaty of the European Union. It's just been ignored. This is building up quite serious constitutional issues, which came to a head in the recent German elections when the Free Democrats, traditionally very pro-European, made it clear they would have nothing at all to do with a European finance minister. So that's the first big problem facing the EU. The second one, of course, is the scale of potential migration from outside the EU, from Africa and Asia, into the European Union, linked to the existence of the Schengen area with zero border controls between many member countries. Those are the issues that will dominate the EU debates in the next 5 years. Brexit is a sideshow for which they haven't got a lot of spare time to talk about. And the UK needs to realise that, because the idea that somehow the rest of Europe is going to stop and spend all their time worrying about how to make Brexit work is a mistake. It's crucial, in my view, and particularly, I think, for an American audience, to understand the difference between three European entities. One's Europe, the second is the European Union, and the third is the Euro area. People in Britain love Europe. There has never been a time in our history when we have not lived more in the rest of Europe, travelled more to the rest of Europe, studied more in the rest of Europe, married more with other European citizens. People in Britain love the rest of Europe. We don't like the Euro area and have no intention of joining it. And we're ambivalent, and have been for some while, about the European Union. The government, I think, in the referendum campaign, failed the test of being honest with the electorate about the ideas and the issues underlying our membership of the European Union. There are three key issues for the United Kingdom. First is the cost of membership. The official numbers published by the government suggest that the contribution we would make to the European Union as a tax to join be a member of the EU would fall from £12.6 billion in 1819 to zero the following financial year. Second is the loss of sovereignty. The House of Lords, House of Commons have estimated that almost two-thirds of the detailed rules and regulations that apply in Britain today originate in Brussels and not with our own Parliament. And the third is immigration. This is clearly an emotional issue, but it's one the government has dodged. This is a country which has always had immigration, and it's been the basis of your success. But immigration is an issue where people need to feel that the government is looking after the existing citizens. There has been a tremendous boost to immigration in the UK in the last 10 to 15 years, on a scale that the government denied was happening. So a few facts to illustrate how important this is. The foreign-born population as a percentage of the total population in Britain has doubled in just over a decade, and it's now higher than the United States. Britain's biggest manufacturing sector, which happens to be food and drink, more than 1/3 of the production workers come from Eastern Europe. 10 years ago, that number was close to zero. 25% of the population in England are immigrants. In London, 40% of the pupils in state schools speak a language other than English at home. Now, it's not that people, I think, are racist. I have lived in a country in Britain where I think 50 or 60 years ago, it was true that people held rather illiberal views, and in particular were deeply suspicious of and didn't like non-white immigration. That has been transformed in 50 or 60 years. The amazing thing to me is how tolerant ordinary working class people have become of the changes in British society, and how intolerant the political class has become of opposing political views. To put the example most clearly, the most popular boy's name in England and Wales last year, of all the births, was Mohammed. Mohammed ranks 352nd in the popularity of boys' names in the United States in 2016. So the nature of local communities has changed. Identity is an issue. Now, I don't have any simple answers to it, and no one is suggesting that immigration just be stopped. But the idea that there shouldn't be a debate on it is the problem. British political parties have just ignored this issue, and it all came to head in the Brexit campaign. During the campaign, the Remain campaign ignored all three of these questions. They denied that we would save money by leaving the EU when the contribution would go to zero. They denied that we would regain sovereignty, which seemed to be pretty odd on the face of it, because we would regain sovereignty. And they had kept on arguing that in any event, they were trying to reduce the scale of immigration, which they had failed to do. Now, it's not the fault of the European Union. Most of these problems are entirely self-induced in Britain. But what they reflect is a failure of political leadership to say to people, yes, these are big issues, and we as a country have to have answers to them. And what happened was that actually the government proved vulnerable to all three of these issues because they didn't engage on it. What they did instead was to take on a ludicrous exercise in forecasting doom and gloom if we were to leave. Now, it's true, the other side forecast that Britain would become a land of milk and honey if we voted to leave. Neither of these seemed remotely plausible, and I don't think any voters were taken in by either side of it. But what people voted against was the establishment continuing once again to mislead them about the things that they really did care about. So where does the United Kingdom go now? Again, what is odd about this is that having voted to leave, you would think that whatever position you took, whether you were for or against Brexit, you would recognize that if we were going to have a successful negotiation with the rest of the European Union, we had to have a public fallback position so that we could say to them, well, we'd like to negotiate a free trade agreement with you, but if you're not willing to offer us an agreement that we find acceptable, we have the ability to leave in 2019 with a credible fallback position. That fallback position would be to leave the single market, leave the customs union, that's what we voted to do in essence, and to trade with the rest of the European Union, just as you do in the United States and as China does, most of the rest of the world does, on what are called World Trade Organization rules. And the role of the civil service and the government is to make clear that that's a feasible thing to do. But so far, the government has not set out a fallback position. It's not put in place, as far as I can see, a credible program to ensure that the computer projects that would be needed to cope with doubling the number of customs forms or to make an ESTA-type visa scheme feasible so that it's just as easy to come in through Heathrow. In fact, it should be easier to enter after Brexit than before. There's no sign of that, and there's no statement, bizarrely, on what on earth Britain's future immigration policy is going to be. Since this was a big issue, it's strange that there is no statement on that. Now, none of us know what the long-run economic effects of Brexit will be. A lot of economists claim they did know and had very confident views, but of course they disagreed with each other. The honest answer has to be, we don't know what the long-run effect is, but it's not likely to be enormous. It's quite difficult, I think, to argue that the economic consequences would be very great. We would lose regulation that currently applies to the whole of the British economy, and EU rules would apply only on that fraction of our activity that would be devoted to exporting to the European Union, about 10% of GDP. There may be some costs in disrupting trade patterns, we don't know, but tariffs are very low. There's no reason why, in the long run, we'll be affected significantly in just the same way as if you look back to when we joined the European Union, you can't really see any sign of that on the level or growth rate of British GDP. It is all about politics, not economics. And I think the striking fact is that the government, having declared that if we voted to leave, there'd be a recession, the British economy was basically totally unaffected by the referendum. It's carried on growing. It'd be nice if it growed faster, but it's still growing. What has been completely destroyed is the state of British politics. It's become more divisive, and every political party has been very badly affected by it. So what we need to do is not to attack, quote, populism as such. We actually need to come and have a genuine debate and produce answers. I remember before the referendum that the good and the great from around the world, including, I regret, President Obama and Christine Lagarde from the IMF, the G7, the G20, all told the British people that voting for Brexit would be a disaster. Well, what was foolish about that is that we did vote for Brexit and nothing's happened really in terms of the economy. But the G20 does have a responsibility to demonstrate leadership in the world economy. It ought to be a source of hope. It ought to be a place where there's effective cooperation in dealing not just with the aftermath of the financial crisis, which has been lingering for far too long, but to offer some positive solution. And one of the sad things about the G20 is that although there was a spirit of cooperation in 2008, 2009, it seems to have disappeared. Politicians just play games. I've never forgotten my experience in February 2009 on the G20, because Britain was had the presidency of the G20, and we were preparing for the London summit for the G20 when Obama came across, and Gordon Brown was the high point of his premiership. But Angela Merkel wanted to have a pre-meeting in secret with the European members of the G20. So one Sunday in February 2009, the British delegation, very small, Prime Minister, Finance Minister, Central Bank Governor, plus one each, went to their respective airports to fly to Berlin. The idea was to fly to the military airport in Berlin, all park the planes in the same place, get into a convoy of cars to go to the Chancellery in Berlin. So I went to Northolt Airport, the government airport in London, on the Sunday morning, and met a young official from the Treasury who said, "I'm terribly sorry, Mr. King, the plane that we've been hoping to use is no longer available. We had a plane of the Royal Flight, but it's been diverted for another purpose." The word golf was used, but who knows? Anyway, it wasn't available. "But don't worry, Mr. King, we have another aeroplane," which we got lined up, so fine. So I stood on the tarmac with the Chancellor, Alistair Darling, and Gordon Brown, the Prime Minister, was flying down from Edinburgh to pick us up and then go out to Berlin. So we saw a plane come in, and it was a small plane, but I thought, well, it doesn't matter too much. I mean, there are only 6 of us, basically, to go. And the small plane taxied up to where we were, and then I saw in letters along the side of the small plane the word Tyrolean Airways. And I thought, Tyrolean Airways? And this Treasury official had gone on the internet and booked the cheapest plane he could find. But it wasn't too bad. It was a small plane. We got on board. There was a very charming air hostess who served Mozart Kugel chocolates to us on the flight. And she wore Tyrolean national dress. So when we got to Berlin, our plane sort of landed and taxied in. And I could see where there were 2 enormous jumbo jets on the tarmac, one from France and one from Spain. And they both had their national flags on the tail fin of the aeroplane. And our little plane sort of trundled along. And we stopped, and the air hostess opened the door and put down the steps. And we very gingerly came down the steps. And I could see President Sarkozy from France standing about 20 yards away, looking somewhat oddly at this scene. And the British delegation climbed down these steps, stood on, and we stood there at the bottom. We waved goodbye to our Tyrolean air hostess in her national costume. And you could see in Sarkozy's eyes, I knew the British were eccentric, but not this eccentric. But in order to restore growth in the world economy, which is desperately needed, and to make the banking system not just safer than it was in 2007, but safe, we need not just more doses of monetary stimulus and money creation, but a much more imaginative approach. We need international cooperation to rebalance all our economies. We need the pawnbroker for all seasons to proof our banking system against bank runs. But above all, we need the creative imagination represented by the founding fathers. Empathy with those who suffered from some of the consequences of globalization, imagination to think of new ideas, and the ability to translate those ideas into practical policies. What I say in the book, and this is my last sentence, we need the audacity of pessimism. It's our best hope. Thank you very much.
Thank you. It was very interesting. My question is sort of a global one, which is the immigration situation facing Western Europe is not one where merely closing borders is going to make it go away. And I wonder if you could comment on how do we begin to realize this world crisis and as a world try to figure out a way to stop all these people from leaving their countries because life is not possible for them there?
So I think this is a massive problem. I do not have any simple answer to it, but I have no doubt that effective border control will have to be part of the answer, because what the European Union as a whole is faced with, and it's not a question of refugees, it's a question now of economic migration, and in particular, the discovery by people traffickers that, they don't care whether they're trafficking refugees or other migrants. They have every incentive to confuse the two, to ensure that people arriving don't have documentation that enables the recipient country to work out who these people are. And if once we create the expectation that there is a feasible route into Europe from elsewhere, no matter where that is, then Europe could find itself faced with a very significant problem. The obvious short-term answer, I think, is for the European Union collectively to be willing to pay some money to governments in, for example, North Africa, for them to police the exit routes themselves. Spain has done that quite successfully across the Mediterranean, and I think we'll see a lot more of this. But it's a fundamentally difficult challenge. And I think one of the very difficult problems facing those people who might want to take a naturally liberal view and say, no, we should welcome migration and so on, is that now the ease of travel, the ability for people in any part of the world to see on their mobile phone what our living standard really is, means that more and more people will want to come. And whatever we say in the comfort of our dining salons, actually, we will not want in the end to admit unlimited numbers of people. Now, part of it clearly is we have a responsibility to help the development of economies in the rest of the world. But history has suggested that it's just giving money is not the answer. Effective governance in those countries and the willingness to have a development strategy is fundamentally important.
Your comments were broad enough that I have 5 or 6 that I won't hit all of. But earlier on, you used the word alchemy when you were speaking about banking, and you were talking about our founding, and Alexander Hamilton seems to have had some role in at least what we view as our alchemy here. And these things keep changing, and we keep finding new ways to throw gasoline on fires, things like the mortgage crisis and manipulation. Is the next manipulation something we haven't seen yet? Is it Bitcoin? Is it something else? Where is international money going to go that's different than your country and our country doing their own thing?
Well, I think my main point is that we shouldn't speculate on precisely what the next banking crisis will look like, because we don't know. And as you say, people will develop new instruments, new types of financing, where there is a vulnerability. The big question is, what is the principle that we should use? And the principle, I think, is very simple. Any institution that issues short-term debt, bank deposits, short-term credit paper, which other people use as money and plays a key part in the functioning of the economy, should be subject to this pawnbroker regime. I.e., they cannot distort their balance sheet beyond a certain limit. It is sensible to allow banks to borrow short and lend long, up to a point. And I think my worry is that in the past, economists have divided into 2 camps. Those who say, we have some international regulations on banks, that's enough, and the other that says banks shouldn't be engaged in risky lending. Neither of these positions seems to me to make any sense. In the end, in an uncertain world where we don't know what the source of the next crisis will be, all that we do know is that in that crisis, the central bank will have to come to the rescue. What's important, therefore, is for the central bank to make clear in advance on what terms it will come to the rescue, in such a way that taxpayers don't feel that they're being exploited and bailing out the bankers. We can design a system to do that, and that's what the point of the book is about.
Do you think the US has done that with Too Big to Fail?
I think we have not solved the problems which were at the heart of the bank runs in 2008. No, I think since bank runs don't happen that often, but when they do happen, they're devastating. The danger, I think, is that because we can't imagine there'll be another crisis in the next 5 to 10 years, and there probably won't be, then we draw too much comfort from that. And what we ought to do is to say, look, instead of speculating on when the crisis will be or where it will come from, let's make sure the system is resilient. And my point is you don't need to have thousands of pages of regulation to achieve that. You have to have one clear principle that the pawnbroker regime is put into effect.
Do the Germans realize that they have such a good deal in the euro because the exchange rate of the euro is so much lower than an individual Deutschmark exchange rate would be?
So the question is, what's a good deal for the Germans? And that depends on which part of the economy in Germany you're operating in. There is no doubt that Germany has benefited from being a member of the monetary union because its exchange rate in real terms, relative to the other members of the monetary area, is very competitive. And that is why they have a trade surplus at present of 8.5% of GDP, far bigger than the deficits which the United States had when those deficits were at their peak before the crisis. Now, the point is that there's a real danger to Germany in this, because if you have such a large trade surplus, what it means is that you must therefore be lending to the rest of the world. You're investing in other parts of the world. But if the rest of the world can't pay you back, then the assets which you think you've got, you won't be able to realize. And so Germany may find that all this effort to produce a big trade surplus has actually gone into boosting the consumption of other countries, but not their own households. And what's ironic about the German position is that in the interwar period, when Germany was being asked to make reparations after the First World War, the German central bank governor came to the United States and gave a speech in which he explained very carefully what was wrong with the attitude of the Allies to reparations. He said, look, you must decide what you think the reparations should be. But unless you allow us in Germany to earn a trade surplus, we can't pay you. We could use the trade surplus to make the reparations payments to you, but you won't let us. France in particular was very bad in preventing the German economy from expanding. And that meant Germany could not possibly earn the foreign currency through exporting that would enable them to meet the reparations demands. So what happened? Well, the answer was Germany borrowed. I mean, every penny that Germany paid in reparations was borrowed from the countries to which they then paid the reparations. And then, believe it or not, in the early 1930s, they defaulted on all the debt. So the net effect was that they didn't actually end up making many reparations. But the fault was not that the reparations were too big in any sense. People debated that, but that wasn't the issue. The issue was that unless you allow countries to earn trade surpluses, they're not going to be able to pay back the debt that you owe other countries. And the poor countries in southern Europe, which find themselves now, as a result of membership of the euro area, having a very uncompetitive exchange rate, countries like Greece, for example, they have no hope of repaying the debt if it's external debt owned overseas. And so it's a myth to think that we can carry on. There's a sort of fallacy that people believe that this can go on without somebody one day having to realize that they've made a much bigger loss than they anticipated. And I think what's really shocked me about what's happened is that when I was a student in the 1960s, we looked back to the Great Depression. We knew why it had all gone wrong, because people then were pretty old and they were fuddy-duddy and they had whiskers and things and wore hats. We were young and we knew about Keynesian economics. It would never happen again. Well, we were wrong. And what has happened in Greece in the last 10 years has been worse in terms of the loss of GDP than what happened in the United States in the Great Depression. Now, we could prevent that. After we did prevent a repeat of the Great Depression in 2008, 2009. We haven't managed to solve all the consequences of that, but we did prevent a repeat of the Great Depression then, but not in Greece, because they are stuck with an uncompetitive exchange rate and forced to pursue an austerity policy, which in itself might make sense if it was accompanied by a sharp devaluation of their exchange rate to enable them to export and hence accept the consequences for their fiscal position. And I think these are things which, it goes back to faulty ideas, mistakes in thinking. That's why we need the Founding Fathers again.
Back to your Jack Kennedy, Gore Vidal beginning. Clearly, you're a man who reads and thinks and writes. Would you tell us how you got to where you are, to being a governor of the Bank of England?
A complete accident. My career divides into two parts exactly equally. First as an academic, both in the States and in the UK, and secondly, going to the Bank of England. So how did I get to the Bank of England? I was asked to serve as a non-executive director on a supervisory board of the Bank of England, which doesn't really have a serious policy role at all. But what it does do is that it means that at the annual family sports day at the Bank of England, I was asked to play in the tennis and the cricket. And I played really well. It was the best tennis performance of my life. And the then governor sort of took up and took notice. 6 months later, completely unexpectedly, his chief economist left. And he had to find another one. Well, he first said, do I really need another economist? He wasn't very enthusiastic. But he was prevailed upon to have one. So he said, okay, if I've got to have a chief economist, I must have one who can play tennis and cricket. And that's how I got the job. And then I managed to get promoted. And I took the tennis and cricket very seriously when I was governor, I can tell you. So in a sense, it was being an academic for the first half that made me realize that when I went to the bank, what was very important, and I remember going to speak to Alan Greenspan about this before I actually became governor, and he told me, it gave me one very good piece of advice, which I followed rigidly through my term. He said, keep the mornings to yourself and don't have meetings except in the afternoons. Now, there were some official meetings that could not be moved, but by and large, I said, I'm not going to do this job by pretending that if you're important, you must be very busy. It's a terrible illusion. The most important thing is to take time to reflect and think about what you're doing and the strategy of the organization and where you want to lead it. And I just pursued that very, very carefully, and I kept those principles firmly in mind. And reading and writing, I wrote all my own speeches, and I think it was important that people felt that these were not the words being read out by someone who got someone else to read them. It wasn't a political statement. It was the result of careful thinking and reflection. I think that's how I did the job, and whatever I succeeded in the job doing, I'm absolutely convinced was a result of that approach.
We have something that was, a measure of the banks is called the stress test that Tim Geithner developed.
Yep.
And I was wondering if you understand that, how your plan is different from this stress test, which everyone touts as giving the government a better measure of the strength of the banks.
So I think that they're complements rather than alternatives. But I think the real benefit of stress tests, which we also adopted, was in the crisis, or coming out of the crisis. Once the guarantees have been given and the banks have been saved, the question was, and I pushed this very hard in the United Kingdom from December 2007 onwards, was that the banks themselves had not issued enough equity finance. They had borrowed too much themselves. They were lending a lot. That wasn't a problem in itself necessarily. The real problem was that they were financing that by borrowing themselves, not by issuing enough shareholders' equity funds. The reason why the equity finance is important is that if banks do make losses, the shareholders can absorb them before people default to their creditors. And it's the default to the creditors that brings down the system, because the banks essentially are forced into insolvency. So the stress tests were very helpful in producing a means of deciding how much each bank should be told to issue in new equity finance. And they were told as well that if they couldn't do it in the market, the government would provide the money and take shares in a corresponding way. And hence you got effective nationalisation of the Royal Bank of Scotland in Britain, and something that came pretty close to it, nearly, for Citibank in this country. So the stress tests were helpful, but I think as time goes on, the problem is that they have to define what is the stress against which you're testing the banks. And that means imagining a scenario which the banks might face and working out whether they've got enough equity finance to cope with it. The trouble is we don't know what the stresses will be in the future. So I think it was very important in 08, 09. I think it's less important since. And what I would do, I'm certainly in favour of putting a limit on the amount of leverage which the banks themselves can engage in. But I think I would almost abolish a lot of the detailed regulations and replace it by a simple limit on leverage and the pawnbroker for all seasons. And we just have to avoid getting bogged down into massively complex regulation. And the reason why is that once it gets so detailed, you know that the banks will be able to afford better paid lawyers, and the regulators get sucked into a negotiation. Good regulation is not about negotiation. It's about setting down clear, simple rules that the players in the game understand, know that it's being applied equally to all the banks in the field. It's not just them being singled out, and in which they can get on with running their business instead of thinking all the time about, oh gosh, what will the compliance officer say? And I think we've got ourselves into a rather bad position with unnecessarily detailed regulation, but nevertheless regulation that hasn't yet made the banking system safe.
Hi, thanks for your talk. So one thing you didn't mention in your talk, which I think is quite important about the referendum result, is the demographic component. Simply put, the older you were, the more likely you were to vote to leave. You also mentioned it's a vote against the establishment, but I think that's somewhat true, but older people have benefited most from the establishment in the UK as their disposable incomes have risen as a result of government policy and younger people's incomes have fallen. So I wondered whether you think, given the demographic component, if you were to hold a referendum again in 5 years, you might get a very different and decisive result for Remain. Does that affect in any way how you think the referendum should be implemented?
So I put two cautionary notes about the demographic implication of the vote. What is clear is that of those who voted, amongst the older age groups, more people voted to leave than did in the younger age groups. That's true. However, if you ask a different question, which is, what proportion of all those people eligible to vote actually voted to remain in the EU, the answers are almost uniform across all the age groups, apart from one, the youngest, which had the smallest proportion of people voting to remain. And the reason, of course, is that not many of them got out of bed to vote. So I find it a bit odd for them to turn around and say, how can you destroy our future if they can't actually be bothered to get out of bed and vote? So the second point I'd make, which I think we don't know the answer to, is if you look, say, 10 years down the road, will it be the case that it's a question of age versus cohort? Is it the case that the younger cohorts, as they age, will remain enthusiastic about being in the EU? Or is wanting to leave the EU a function not of when you were born, but of how old you are? So you may get the phenomenon that it's always going to be the case that younger people will be enthusiastic about being in some international grouping because they like to travel, etc. But older people will be more cautious about that. And that may be true irrespective of the cohort. Or it may be the case, as you imply, that as time passes, more and more of even the older age groups, because they belong to different cohorts, will actually want to stay in the EU. I don't think we know the answer to that. All we do know is that so far, there has been no obvious evidence of remorse. The opinion polls show the same outcome. But what I would say about the vote is that what to me was the most disturbing thing about it was that neither the Remain nor the Leave campaign, the people actually going on television and debating this, ever really put forward honest, clear arguments. There were slogans. And I was just very struck when I was talking about my book in the UK, I didn't speak about Brexit, but in the questions, the number of people who said, where can I find objective information that will set out the facts that would enable me to make up my mind? I think it was a referendum campaign that people were genuinely engaged in. They wanted to vote on the issue. It wasn't a referendum on the performance of the government, it was about the issue. But it was actually the worst political campaign in my lifetime in Britain, and I've never seen arguments which were so feeble, so obviously biased, as both sides put forward. And, you know, it was the kind of campaign where you just naturally want to vote against the last person you listen to. And that's terribly destructive of political debate. But it'll be interesting to see how it evolves.
Yes, it will be. Please join me in thanking Mervyn King.